Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all those confusing corporate filings that everyone else ignores but secretly matters a lot. Today we're diving into a report from Hyatt Hotels Corporation, and let me tell you, it's all about a big purchase they made. Stick around, because we're going to decode what this means for you and for the future of your hotel stays. Before we dive in, if you are tired of corporate jargon and want clear, actionable insights from SEC filings, make sure you are subscribed and join our growing community on Discord. The link is in the description below. So what exactly is this document? Think of it as a quick update a company has to give when something big happens. For Hyatt, that big thing is an acquisition, which is just a fancy word for buying another company. Hyatt announced they bought Playa Hotels and Resorts, Nevada, basically another hotel company. They completed this deal back in June of 2025. Now this report is giving us a peek at the financial picture after this big purchase. It's not a full year-end report, but more of a snapshot to show how this acquisition is being accounted for. This is where the real meat is. They've included these special financial statements called pro forma. That just means these are the numbers as if the Playa acquisition happened before the date shown. It gives us a combined view what Hyatt looks like with Playa now part of the family. We're looking at income statements for the first 9 months of 2025 and the full year of 2024, and a balance sheet as of September 2025. These are unaudited, meaning they haven't been fully checked by external auditors yet, but they're still important for understanding the immediate financial impact. And who's signing off on this? Joan Bottarini, their Executive Vice President and Chief Financial Officer. Big jobs, big numbers. Let's look at some key figures. Since this report is focused on the pro forma financials after the acquisition, we're going to look at how this transaction is shaping Hyatt's financial statements. We're seeing combined figures, which means we're looking at the revenues and expenses of both companies merged together. Imagine adding up all the money Hyatt made and all the money Playa made, and showing that as one big number. Now the report doesn't give us raw numbers here, but it refers to Exhibit 99.1 for the detailed pro forma statements. That exhibit lists combined income statements for the 9 months ending the 30th of September 2025 and the full year 2024, as well as a balance sheet as of the 30th of September 2025. While we don't have the exact figures from the report itself, understanding what these pro forma statements represent is crucial. They are designed to show what the combined company's financial situation would look like if the acquisition had occurred at the beginning of the periods presented. This helps investors understand the potential scale and profitability of the merged entity, smoothing out the acquisition's immediate impact on reporting. While the exact revenue and profit numbers for the combined entity aren't directly presented in this 8-tape body, the pro forma statements are designed to reflect the combined financial performance. In typical acquisition scenarios like this, companies would be looking at how the acquired company's revenue and profits contribute to the overall company. If Playa was a profitable company, this acquisition would boost Hyatt's top-line revenue, and if managed well, its bottom-line profit. The pro forma statements in Exhibit 99.1 are intended to quantify this boost. For instance, they'd show what kind of revenue the combined entity is generating per S-hair, or what the total profit margin looks like after integration. Essentially, Hyatt is showing investors the expected financial picture, as if Playa was always a part of Hyatt, allowing for a clearer comparison of performance trends going forward. Post-acquisition. Looking at this from a Warren Buffett perspective, you'd want to see if this acquisition makes strategic sense. Is Playa Hotels and Resorts in a growing market? Does it add new capabilities or geographic reach that Hyatt lacked? The pro forma financials will help answer this. If the combined revenue and earnings are significantly higher and growing at a healthy rate compared to pre-acquisition Hyatt, it suggests the deal might be accretive, meaning it adds value. However, you always need to look at the debt taken on for the acquisition. A lot of debt can be a major risk even for a growing company. The pro forma balance sheet would show the combined assets and liabilities. If there is a huge increase in goodwill and intangible assets on the balance sheet, that's the premium Hyatt paid over the fair value of Playa's identifiable net assets, and it carries the risk of future write-downs if the acquired business underperforms. This report is essentially Hyatt saying, here is what we look like now that we own Playa. They're giving us the immediate financial impression. The pro forma statements allow us to see the scale of the combined business and its potential earnings power, separate from the noise of the actual acquisition transaction itself. It's a way to present a clearer picture of the ongoing business operations post-merger. So, what's the big takeaway here? Hyatt just got bigger by buying Playa Hotels. This report is kicking off the process of showing us what that looks like financially. It's crucial to watch how these pro forma numbers translate into actual reported results in future filings to see if this was a smart move for Hyatt and for its shareholders. Alright, that is our quick decode of Hyatt's Form 8. What do you think about this acquisition? Does it signal good things for Hyatt's future? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and we'll see you in the next video.